Hello everyone and welcome to another review of the FX Delta 2 trades. My name is Jordan guys and I'll walk you through a few of the trades that we took, explain why, what and how. So without further ado, let's go ahead and check out a few examples, starting from the top. Aussie Kiwi, a sell opportunity, a sell signal that we get. Hope this is clean enough now. So the first thing, of course, that we are going to check here is the quality. Quality of type A means good. The range is also fine, and this is where we switch to the actual setup. And right here we can clearly see that we have some kind of consolidation phase coming before the previous moves down, which means one more push lower would make a lot of sense. Now the problem here is that the divergence in this case is rated as 1 star only, and this is a concern. What does that tell us? It tells us that the move that we're looking at is not very volatile. Inside such moves, the best practice would be to draw some kind of ranges and make sure your trading is going right next to this. Let me just open the drawing tool and I'll give you a better idea. So basically when you see 1 star divergence, right, then you're probably stuck in some slow volatility, which means chances are you have some kind of a range and you can draw some kind of lines in the most recent move. In this case, this is what we get, which means the price could be pushing lower, testing this zone here, and from this place it could be bouncing up or it could be breaking down, but we're definitely moving inside some small consolidation phase. So when I see 1 star divergence, I usually do this and try to figure out what would be a level where the price might be reacting. This one pushed lower, and as you can see, this is short-term trade. It started bouncing to the upside almost immediately. I just want to very quickly walk you through my process of thinking on the higher time frames. So we're now on Aussie Kiwi 4-hour chart. We can see that the daily chart is definitely against. We are in a strong bullish trend based on daily. On the 4-hour chart, we managed to identify this pattern right here, the delta pattern. And if we take a look at the bigger picture, it makes sense for the price to push slightly higher, right? Ignoring everything we said on the 15-minute chart, this is just 4-hour chart analysis. We have the delta, we expect continuation lower, but first of all, it's coming against daily. Second of all, we had a breakout before that, which was never tested. This is approximately where the arrow is, the consolidation zone and the entry that we attempted to sell here. All right. So first of all, no retest of the breakout. Second of all, we only have one wave here. Now, Aussie Kiwi is the type of pair where we can many times see the price is just consolidating and very quickly continuing lower. So for this specific pair, that would be perfectly fine to trade here versus the previous swing low. But when we put all the things together, I think just a small scalp would make much more sense. And for those of you interested in the current analysis, I believe that we definitely have room to continue lower now, even though the daily is against, because if we measure this as the first wave, then we can do this kind of analysis and we can see that the 100% was reached, but no divergence is in place. So the short-term trend line is here, the longer-term trend line is slightly above, coming from these two highs, right? And basically the price is now reaching this very specific level where we have the meeting of the previous breakout with this short-term trend line plus hidden divergence, plus on the 1-hour chart we do have divergence from the histogram. MA is not there yet. And of course the 4-hour chart bearish delta pattern, so short-term bounces from this zone now after two waves would make much more sense. Okay, so that is basically my idea about Aussie Kiwi and what was done there. How do we exit? Okay. All right, so the next one we have on the list is Pound Aussie, also going for a sell here. And again, the first thing that we're going to do is check out the trade management and the filters along with the whole panel basically, right? So what do we have here, guys? The filters are saying that the delta quality is more or less fine. We have monthly against, which doesn't bother us too much at that stage because we're working with 4-hour chart and the 15-minute chart. This is too far away from us. The range is also fine, and this is where we're going for the divergence indicator just to see whether we have good volatility or not. Now, for me personally, this I consider volatile. Okay, this is volatile. So again, this indicator might not be perfect, or at least you might not agree with it every single time. But that's pretty much the idea, right? Now here on the bigger view, let's just jump to the platform so I can tell you what exactly I mean. For Pound Aussie, we had a range, right? And this range started here with the breakout. This is where the delta pattern appeared. This is also where we got the two waves to the upside. Middle of the range, which is usually a natural support and resistance zone, reached, right, approximately 50% of this move. And after this second wave, this is where we started the attack. Okay, right there. So Pound Aussie, the higher time frame explanation is more or less clear, straightforward. Range, breakout, delta pattern during the breakout, double wave pullback. We're attacking the second wave, and the idea is for us to see continuation to the downside. Then what we do have on the list, let's take Aussie Cat. Yeah, with the two divergences. So we had first divergence right here, then the second one, and the assumption was that we should at least make some push to the upside. Now in this case, again, the quality is good. The divergence this time is 2 stars, which means we do have volatility. The more interesting part in that case is the higher time frame, at least for me, because look what's happening, guys. We have push up, and if I have to be honest, I didn't really agree with the delta on this one when it comes to manual analysis, right? Because we had this leading diagonal push up, and as long as we're holding that high, the idea was that we should be continuing lower. However, what I do agree on is the idea that we should have been taking one more push up, or at least I was hoping for one more push up, divergences to form here below this swing, and then the push down to come, which meant in the shorter term this was supposed to be consolidation that will provide one more wave up, which is more than enough on the 15-minute chart to catch some pips. That was one of the things. The second thing I wanted to mention here is the alternative trend line from these lows, and you can see where the entry is coming from, right there. Okay, so if I drop to the lower time frames, actually I'm going to also drop here the Fibos, and you'll see how things start to fit. So basically this is where the entry is happening, around these candles, and this is where we have the level. All right, this is the line. We're testing this alternative trend line. This is where the divergence was completed, and also the 100% level being tested, rejected, and the expectation from this zone is to push higher. Now in such cases, when you have a really good risk reward ratio, you can even drop your exposure, the risk that you're going to be taking, because with some very tiny exposure you can be winning 1 to 3, 1 to 4, maybe even 1 to 5 if you're waiting for the price to create higher highs here. Okay, and in case you lose a very, very tiny portion. Of course, all that depends on your money management and how you're dealing with your targets, which means trade management, but those are different subjects. What else? Let's cover one more trade. I have it prepared on the chart. Cut franc, a sell. This time the sell comes from the 4-hour chart. Okay, and the combination here is daily pattern, daily delta pattern down plus 4-hour chart entry. Now what we can see here immediately is that we had the first rejection, which is divergence, false break, second rejection, again divergence and false break, and the aggressive entry here pays. The conservative entry after the breakout, all right, was attacked at the pullback. The range currently shows okay, but when the price was lower, that would be showing that it's not okay, right? Because we're measuring basically this distance right here, and the idea of the range is to tell you whether this distance here is too large, depending on the higher time frame volatility or not. So that's why this one was attacked during the pullback. And what else? I mean, that's pretty much the idea, right? We also have the 61.8. The price broke above it, reached the 78 even, and then we have drop below, meaning drop below the 61.8, attempting to continue lower, breaking below this zone, and this is basically where the attack was done. This one reached the stop loss, unfortunately. And now if we go back to the live chart, you can see exactly what happened. First, second divergence, third divergence with third false break, and we never managed to actually gain the momentum to continue lower. The higher time frames look like this, so nothing against when it comes to the delta pattern. We do have hidden bearish divergence forming, so pretty much all the conditions that I'm looking for were met, and this is where the execution of this trade comes at. So that would be all, guys. Don't forget to join our free Telegram channel. We have plenty of interesting material that are being shared there. If you have any questions regarding these setups or anything else related to trading, don't hesitate, leave us a comment below and it will be answered. I'm wishing you a fantastic week ahead. Bye for now.